Hey, welcome everybody to the part 2 of this financial wellness series that we're doing with our extension partners here. We're excited to have Vincenza and Alicia here with us to talk about unraveling the mysteries of credit. So for anybody that may be watching this or haven't participated in our remote work certification courses, we are the Utah State University Extension Rural Online Initiative or Remote Online Initiative. And what we do is we teach individuals how to succeed in remote work. And we also teach companies how to lead remote teams. So if you're interested in our program, you can visit our website at remoteworkcertificate.com. You can get more information that way, or you can reach out to us and would be happy to help you learn a little bit more about our program. So today we, like I said, we have Alicia and Vincenza here from our financial wellness program within Extension. This is I think it's a fairly new program. Is that correct? And they're doing a lot of.
Yeah.
A year?
Third year. This is our third year.
Okay, awesome. So they've been doing a lot of really good stuff, and they're actually a really good partner of our program because we get a lot of people that come through our course and haven't been employed before or something like that, or they've not been in the workforce for a while and they're trying to get a job just so that they can help with their family finances. And sometimes when we get another paycheck coming into the house, we don't necessarily know what to do with it. So we spend it unwisely or something like that. So this is one of the reasons we've got this program going, or this partnership going with them. And so they're here to help us learn how to spend that paycheck wisely that our students are starting to get. So we'll turn the time over to Alicia first, and then we'll go from there.
All righty. So we are also brought to you in part by the Department of Workforce Services here in Utah. And they're the ones that fund our team. And today, like Trenton mentioned, we're going to be covering some strategies and tips about using credit and using it wisely and to your advantage, we'll say. And we are glad that you guys could all join us today. And so we have 3 objectives so that you guys kind of know what to expect from your time here with us today. So today we'll be going over the components of your FICO credit score. The FICO score is the most popular one used by lenders, so we'll be focusing on that one today. We'll be going over the 5 main components of it, and then we'll go over kind of understanding your credit reports as well, what information you could see on there, where to check it for free as well. And then we'll also go over some tips to help keep your credit safe and avoid identity theft as well. And so we want to start this out on a little bit of a fun note. So we're going to have a little video here.
But we're not hearing it.
They don't give you no other instructions, they just want you to check it. They say things like, you don't want to live with your parents forever, do you? You better check that credit score. But it's like, if you check it and it's bad, it's still bad. Like, checking don't help. Like, I'd like to see this play out in a bank somewhere, right? Like, some guy comes in to get a loan and the banker's there and he's like, well, Jim, your credit score's terrible, but I see here that you've been checking it a lot. We appreciate that. So here's a house.
So it is important to stay on top of your credit and be checking your credit report and your score often as well. And we'll be talking a little bit more about that as we go throughout our time together. And so we're going to launch a poll as well, just to kind of see where everybody is as far as some of these topics. And so it's true or false, and your answers are all anonymous. So don't feel bad if you're not sure about some of the questions. So our first one is true or false. It's better for your credit score to carry a balance on your credit card than it is to pay it off in full each month. Do you think that's true or false? The second question, checking my own credit negatively affects my credit score. Do you think that's true or false? And then our third question, true or false, incorrect personal information on your credit report is a sign of identity theft. So we'll go ahead and give people maybe another 30 seconds or so to have a chance to answer and participate with us. Alrighty, it looks like you guys are actually quicker than I was thinking on those questions. So we'll go ahead and end the poll and share the results. And we'll go over these questions together. It looks like we were a little bit split on all of them. It looks like we were about 30% and 70% split. So it'll be fun to go over these together. So number one, true or false, it's better for your credit score to carry a balance on your credit card than it is to pay it off in full each month. About 30% of you said true, and about 70% of you said that's false. And you guys were correct that said false. Carrying a balance on your credit card doesn't help your score. It ends up possibly hurting your score in the long run, depending on how you end up using that credit or how much of your available credit you end up using and carrying with your balance as well. And really, if you're able to afford to pay off your credit card each month, then why not? And it's going to save you money in the long run as well. And it'll also just help show lenders and creditors that you are using your credit responsibly as well, and that you're not overextending yourself and using more than you're able to keep up with as well. And then our second one, true or false, checking my own credit negatively affects my credit score. So again, about 30% said true and 70% said false. And that one is false. That one's probably one of the biggest myths out there around credit, along with our first question that we just talked about. And so when you check your own credit, it is considered to be a soft pull, and that does not negatively affect your score. It doesn't positively affect it either. It's just a good practice that experts do recommend that you are checking your credits on a regular basis. And it's more so the hard inquiries or hard pulls to your credit when you are out shopping around for new credit or applying for new credit. Those ones are going to be hard pulls, and those will have a small negative effect on your credit score, which we will talk a little bit more about later on as well. And then our last question, it was about 70% said true and 30% said false. And that one is true, but it's also a sometimes. This one's kind of a trick question that we threw out there at you guys. So when you find incorrect personal information on your credit report, it oftentimes is a sign of identity theft, but not 100% of the time. Because the credit reporting agencies or the credit bureaus are handling so many people's personal information, and so much information is coming in, there's oftentimes mistakes that are made, just innocent mistakes. And those are pretty common. I think I saw that about 90% of people have a mistake on their credit reports. That's just an innocent mistake. But On the other hand, depending on the type of mistake or the type of personal information that's incorrect, it could be a sign of identity theft, especially if it's having to do with your social security number, or if it's an address that you have never ever lived at and you haven't even heard of that address before. That could be a sign of identity theft, that somebody has applied for credit while living at a different address than you have. And so, on that note, having a wrong address is what about 56% of people have found to be an error on their credit report. Relatively closely followed by a misspelled name. So that's about 1 out of 3 people have a misspelling on their name, which that could also be a sign of identity theft as well. But if you have a pretty common name, then that could just be an innocent mistake as well. So I'll go ahead and turn the time to Vincenza for a little bit.
Okay, so we're going to get into our first objective and talking about what is a credit score and what makes up a credit score. So there's less mystery than some of you or some people in general might think. Most of you know that it's a 3-digit number, right? And this is really a score that's developed for lenders, not necessarily for consumers, because lenders like to just punch a few numbers, few things into a computer and then spit out this magic number, and that will just tell them how high of a risk are they taking by loaning you money or letting you open a credit card. So it helps them determine the likelihood that you're going to pay back the money that you borrow. And that range varies between 300 and 850. And there are other scores besides FICO, but we're going to focus primarily on FICO because that is the one that more than 90% of lenders use. It's the most common scoring model, but the other ones that are out there are similar. So if you know your score in one and you have a great score, a good score in one, you likely have a good score in another model. And then there are 5 factors. And these are the 5 factors that we can understand as consumers that we can do, that we know that we can control what kind of credit score we have. We can't control everything because they don't disclose to us exactly how to get that 850, because if they did, then everybody would know exactly what to do. But knowing the 5 factors gives us a pretty good indication of where we stand, right? And lenders use different scoring models. So you may pull up your own credit score, go to a bank, and they might have a slightly different number. And that's common. Depends on where they pulled it from, which credit bureau, and then the timing. So if there's a huge difference between the number you pulled and what they're showing you, then that's where you'd want to get some explanation from the lender and say, why is your number so different than mine? Okay, so you might be thinking, well, what's a good credit score? So just for your information, the average credit score FICO in the United States has been at about 716, and every year it's been increasing a little bit. And interestingly, the FICO score of rural consumers is slightly lower, 708. Now, as you can see here from this chart, 716 and 708 are still considered good scores. They're going to qualify you for pretty good rates on a loan, a mortgage, etc., credit card. So what they're saying is, according to the Consumer Financial Protection Bureau, which is an agency that's supposed to protect consumers, did this report to try to understand why is there just this difference between rural consumers and urban consumers. And so some of the key findings were that oftentimes, and many of you may live in rural communities, they're less likely to have access to physical bank branches and often resort to other types of loans, for example, predatory lenders and non-bank entities like payday loans, things like that. And so they're less likely, if rural consumers are borrowing from these types of non-bank institutions, those don't get reported to credit reports. That activity does not get reported unless you go into default. And then at that point, let's say a payday lender would report that to a debt collector. And then at that point, that will show up on your credit report. So predatory lenders, payday lenders, they don't hurt and they don't help your score. when you're paying it back because it's not being reported and reflected on your credit report. Your credit score is based on the information in your credit report, and we're going to get into that a little bit more. So the other thing is that rural customers also are more likely to have at least one delinquency reported on their credit reports, about 47%. So that could be another indication why rural consumers have a slightly lower average credit score. So I'm sharing with you here the range of FICO credit scores. Whether your scores are considered good, bad, excellent, really depends on the context in which they're being judged. So if you're trying to get a super low, very best rate on a mortgage, you might have to be in the very good or exceptional, or you're trying to get a platinum credit card, for example, you might have to be in that really high range. But being in a good range for most folks will get you what you need at a reasonable rate of interest. Any questions so far about credit scores or the ranges? Okay, we'll move on to just talking about those 5 factors. So these are the things that we do with our finances and with our money that we have some control over. As you can see here, your payment history and how much you owe or how much available credit are you using, for example, on your credit card, that's worth 65% of your score. And then the other things include new credit. So how many new applications are you putting in a given period of time for a credit card or a loan? How long have you had credit? How much history do you have? What's the age of your oldest account? That's worth 15%. And then credit mix is worth about 10%. Meaning lenders like to see that you can handle different types of credit. For example, a credit card, maybe an installment loan like a car loan or a mortgage. Doesn't mean you have to have one of each, but they just do like to see that you can handle a variety of different types of debt. So I just wanted to point out that the most important thing that we can do to help maintain our credit score, to build or increase, is making sure we pay our bills every single month, always on time. And then a little pro tip here, try not to use more than 30% of your available credit on your card at all times. Meaning, for example, if you have a credit card that has $1,000 limit on it, try not to have more than 30% or $300 charged on that at any given time, because the more of your available credit that you use, the more risky you look to a creditor, and they start to get nervous that you're not going to be able to pay it back. So 30% is kind of that magic number. If we can keep it at 30%, 10% is even more ideal. So we had that question in the poll: is it better to carry a balance or to pay off your credit card every month? And for this reason, it's better to pay off your balance every month, because it keeps your amount owed lower, right? Because that just shows you as a less risky consumer. So that's the reasoning for that. Okay, so I just wanted to show you here the effect of just one late payment. A late payment will get reported on your credit report, and negative accurate information will stay on there for up to 7 years. So these are just different people, different profiles. They have different balances. They have there's all these moving parts to a credit score. And somebody that has a higher credit score is actually going to take a bigger ding by just making one late payment. Again, this is one of those nuances of the credit score that they don't tell us exactly how we're compared to other consumers out there, but just know the moral of the story is don't make late payments. Once it's beyond 30 days, it'll get reported. And then that will start to negatively affect your credit score. Of course, the longer the time period from when you made that late payment, every month or so, the effects of that late payment starts to be a little bit less. But just know that when you try to apply for future credit and they see all these late payments, it's going to make that lender or creditor pause and say, why is this person not able to pay their bills? Are they overextended? And so we just want to highlight the importance of making sure that we pay on time every single month and stay within our means. Okay, so you can get your credit score for free. You can always pay for it, but we always like to share free ways to get things. So if you're curious to get your free FICO score, you can start with, if you do have a credit card, start with the credit card company that issued you that credit card. More times than not, they will offer that to you. They're paying for it anyway. They'll offer it to you as a customer courtesy. Also check with your banks and your credit unions. Oftentimes they will provide you with a free FICO score. And then if you're interested in getting a Vantage score, which is very similar to FICO, it's not as common as the Vantage. And so when you're checking your credit score, you should see some kind of language on it. When you look at it, is it a Vantage score or is it a FICO score? And you can get those for free from these different websites. They're all free. They're not going to ask you for a credit card. If anybody asks you for a credit card to get a FICO score, that means they're either trying to charge you for the credit score, or they're trying to sign you up for some kind of credit monitoring. So just be aware, if you don't want to pay for it, read the fine print. It should be free if you check from these four that we have listed here: Credit Karma, Credit Sesame, Capital One, CreditWise, and NerdWallet. Why is it free? Because they will advertise to you. They will try to target you and try to offer you credit cards but they're also very educational. They'll give you a lot of hints as to, why did your credit score go up this month? Why did it go down this month? Here are some things that you may want to consider. So I think it's a great way to just get an education about how credit scores work. Even though I said that the FICO score is predominantly used in the marketplace, the Vantage score is starting to become more popular. The U.S. Department of Housing and Urban Development will use oftentimes a Vantage score, the Federal Housing Administration, and National Credit Association. So we're seeing that out there more and more. How are we doing on time, Alicia? Okay, did I want to do credit reports? Okay, so now we're going to jump into our second objective, which is talking about the actual credit report. Remember that the score is based on what is in your report. This is a website that's authorized by federal law. It is free to consumers. You'll notice if you do a Google search on free credit score, this will not be the first one that pops up. But know that this annualcreditreport.com is the legitimate free source to get your credit report. And I wanted to point out that there are three major credit reporting agencies: Equifax, Experian, and TransUnion. You want to pull all three reports. Normally, it's free for consumers to do that one time a year. You can get 3 reports a year, one from each of the credit reporting agencies. But since the pandemic, because there has been such a huge increase in identity theft and fraud, the credit bureaus are allowing consumers to pull it once a week for free. So you can pull all 3 once a week. We say, why not pull it once a month, just to be keeping your eye on what's going on. It's totally free. Not going to ask you for a credit card. It'll just take you through. You'll have to answer some questions that only you should know about. If you don't have a credit, if you've never used credit, you're not going to have a credit report, right? So if you're new to credit, it takes about 6 months of activity to actually generate a credit report. And so this is how you can get it for free. And again, if it asks you for a credit card or some wants you to pay, it's not annualcreditreport.com, and they're probably trying to sign you up for something else. Okay, that's where you get your credit reports for free. If it's been more than a year since you checked your credit reports, at the end of this webinar, I highly recommend you get online and you go to annualcreditreport.com and you look at those credit reports. It's our first step to detecting any kind of fraud or identity theft. Okay, there are 6 main components. Depending on who you pull your credit report from, whether it's Equifax, TransUnion, or Experian, they're going to look a little bit differently. So this is just a sample, a generic sample, but you just want to look at, we want to point out what are the things you want to look for. We talked about in the poll question about a lot of times there'll be misspelled names, there'll be wrong addresses. You want to make sure your social security number is accurately recorded, your year of birth. Any of these things typically will have an easy way for you to dispute. If it is identity, they're going to ask you for some identifying documentation you'll have to send in, like a copy of your driver's license or etc. But typically fixing an address or a misspelling of a name, you have the right to dispute it and to remove incorrect inaccurate information from your credit report. So that's personal information. Make sure everything looks okay. Secondly is employer history. So anytime you applied for credit or a loan, typically they want to know, who do you work for? Where does your income come from? So you may not see every single employer you worked for. You would only see employers that you listed on a credit application. What happens if you don't recognize an employer on your report? Do you think that could be a sign of identity theft? Anybody want to show a raise hands? Do you think that could be identity theft if you see an employer you've never worked for listed on your credit report? Actually, it's possible. Because an identity thief could list an employer on a credit application using your identity. And then that application is reported to a credit bureau, and then that name of that employer suddenly shows up on your credit report. So make sure that you investigate that if there's an employer listed that you've never worked for. And just know that your past and your current employment doesn't impact your credit score, just like your income. Income and who you work for doesn't affect your credit score or credit report. And then just so you know, as a consumer, you have the right to put a statement on your credit reports. Let's say you had an issue with a vendor, you bought something, for example, this person has something in collections or his payments are late because he bought a radio and it was delivered defective and they wouldn't repair it and they wouldn't replace it. So he's refusing to pay it. So as consumers, we have the right to put a statement on our credit reports, just in case. Let's say you wanted to apply for a credit card or a loan and they see this thing on your credit report says, you haven't paid this. This has been late for 90 days. And then they don't have to read it, the lender or creditor, but at least you have the right to explain why. And maybe you're in the process of trying to get that settled. So we have the right to do that. And that's called a consumer statement. Here's kind of the nitty gritty of the credit report. We want to make sure that you recognize all of the accounts. And you want to make sure everything's listed accurately. Like if you know you've never been paying late and you have this late payment showing up on your account, that could be a red flag. Like what's going on here? Or I don't recognize this account. Or maybe you had a credit card you used to have years ago and you forgot about it and you didn't realize it's still open. Or you thought you closed it and it was never closed. So just make sure you go through here. Typically, when you pull your credit report, any negative information is kind of going to be in the summary. It's going to come up first. So if there's anything that's in collections or late, they typically bring that to your attention first. Okay, but it's important that we just make sure we recognize everything, that nothing looks unusual or we don't recognize. Public records. The only thing that would ever show up in public records on a credit report is a bankruptcy. So if you've never applied for a bankruptcy, you won't see anything here. If you have, you want to make sure that the date file is correct, because that's going to affect the date of when that will drop off. Depending on the type of bankruptcy, some will stay on there for as long as 10 years. They used to allow tax liens and judgments, but they passed a legislation that we have to remove that just because it takes so long for consumers to fix errors, because it takes so long for court documents to be uploaded and updated. So that was hindering a lot of people. So only thing you need to worry about here is you never filed bankruptcy, you shouldn't see anything here. And then this is where we talk about inquiries. Remember, we said that's 10% of your credit score. So you're going to see inquiries here when you've pulled your credit report, which only you see. And you're also going to see inquiries. Let's say you applied for credit. Even if you didn't get the credit card or get the loan, when you give permission for somebody to access your credit, you're going to see that on your credit report. So you just want to make sure, oh yeah, I applied for a mortgage. I remember that's the name of the broker or the bank. That's who pulled my credit. If you see something you don't recognize, you need to dispute it. That could be a red flag, because somebody may have stolen or attempted to steal your identity, may have not been successful in obtaining that, but now you know, hey, somebody's got my personal information that's floating around out there. So you want to make sure you recognize any inquiries. And if you do have hard inquiries on your credit report that are legitimate, just know that they automatically drop off after 2 years. And soft inquiries, meaning when you pull your own credit report, or if you ever get those offers in the mail, oh, you're pre-approved for this credit card. That's how they access your information, but it's not a hard inquiry. This is how the credit bureaus make money. They sell our information to these companies, and that's how they can target consumers for loan products or credit cards. Okay, but that does not negatively affect your credit score unless you actually apply for the credit. Then you'll see a temporary ding to your credit score. So if you do find an error, you can dispute it right there on the credit report. If you're pulling it online, you can also do a form. You can download a form and do it via regular mail, whatever you're comfortable with. But if something is wrong, you need to report it to the credit bureau that's reporting the information. You can also contact the business directly. Let's say they reported a late payment. You're like, I didn't pay late. You can call them and ask them why sometimes they make mistakes. And if you're not getting resolution, we can elevate it and we can go to the Consumer Financial Protection Bureau. They have a website, cfpb.gov, and they will help you with the steps of what you would need to do to fix any errors or disputes that you have. When you file a dispute with the credit bureau, they have 30 days to respond, and they have to come back to you and say, this is what our investigation found. It was correct or it was incorrect. We're going to remove it from your credit report, or no, sorry, it's going to stay because it's accurate information. Okay. Any questions so far? How many of you have pulled your credit reports before? Anybody here? Yep. Awesome. It's really, really important that we do that because that's our first line of defense. So 50% of Americans reported being a victim since the pandemic. That's half the population. That's crazy. Some type of identity theft. And the #1 complaint they get is credit card fraud. And you know, identity theft cases are an all-time high because there's so many different ways that they can attack us now. Emails, texts, phone calls, you know, online. It's just getting easier and easier for criminals to find ways to get to us. And this is just what's reported. So most experts say that identity theft is severely underreported. So I would suspect this statistic is even higher. And so think about this. There's a new victim of identity theft every 22 seconds. That's pretty staggering. And so a lot of studies that are being done right now are indicating that this will increase. By the time we get to 2023 and they start reporting on 2022, this number is probably going to be higher. So it's really important that we understand ways that we can protect ourselves. So about 2.8 million people last year said that they had credit card fraud. So what they're doing is either they're accessing a credit card that a person already has, or they manipulate people into sending them money. Gift cards, they'll say, you know, make a payment through PayPal or whatnot. In other cases, they just sign up for a new credit card using your information. So what are some things that we can do to be proactive? Let's talk about that. Never click on unsolicited emails. If there's a link inside an email and it looks like it's coming from your bank or it looks like it's coming from your cell phone provider, never click on it. Go directly to the website. Go directly to your bank. That's how they get you, because they have you clicking on that. It looks like their legitimate website, but what they're doing is they're getting your personal information. Don't use obvious passwords like your birth date, your maiden name, last 4 digits of your social security numbers, your house number or phone number. Please do not repeat passwords. I know it's difficult, especially a lot of us have a lot of passwords we're trying to keep track of. But if you repeat passwords and a thief gets a hold of one, they've got the keys to the kingdom. Because if you're repeating passwords and they get that password, they're going to try it on everything. Consider using a password manager, a little notebook, writing them down, or they have digital password managers, depending on how many different accounts you have. But really important that we don't do that. You'd be surprised how many people put password 123 because it's easy for them to remember, but it's really dangerous. Check your credit report. We talked about that, very important. At a minimum once a year, check each of them. When you get those credit card offers in the mail or a bill that has your name and your information and your address, please make sure you shred that or you burn it rip it up. Don't just toss it in the recycle bin or toss it in your trash. Because a lot of people actually dumpster dive and will go into recycling bins and they will steal mail. So be mindful of that. Keep your mail safe. And if you don't like getting all these credit card offers in the mail, if you're inundated with that, you can go to a website. It's called optoutprescreen.com. OPT, opt out, OUT, prescreen.com, and that will unsubscribe you from marketing lists. I think I've gotten 1 in 3 years. I do not get them anymore because I'm not, if I want to apply for credit, I know where to find it. I don't want to get inundated with credit card offers. And then we can also freeze our credit for free. And I'm going to take a minute to just explain that because number one, it's free, and number two, it's very effective. So what is freezing your credit? So it doesn't stop you from using your own credit or existing accounts, but it makes it more difficult for people that are not you to open credit in your name. So it can't protect you from identity theft because it doesn't stop what's happening. Like, for example, I have a Macy's credit card. It makes it difficult for somebody to open a new account, but it doesn't protect me from fraudulent activity on my current account, right? So that's why we want to check our credit reports. It's like a twofold type of protection here. So how do you do it? Number one, it's free. It's free to freeze your credit report, and it's free to thaw your credit report, because if you want to apply for a loan or credit card, you have to thaw your credit report because you are blocking access to, let's say I want to go buy a car and I'm going to get a car loan and I have all my credit reports frozen. And then they say, Vincenza, you need to thaw your Equifax credit report because we need to go in there and pull your information so we can see if we can qualify you for a loan. So I have to go online or call Equifax and say, here's my PIN or here's my password. Please file my credit. And you can either do that indefinitely or you can set a certain amount of time. And I'm telling you, it's worked for me. I've gotten letters from a credit card that I didn't apply for, but somebody tried to and said, sorry, we couldn't approve you for this credit card because your credit report was frozen. So I thought, oh, it actually works. It actually blocked somebody from trying to open an account in our name. So really, really important. It's free. You go to the website, you go to the Equifax Credit Bureau, Experian, TransUnion. If you just Google Equifax credit freeze, it's pretty simple to do. And you just, like I said, you set a unique password or PIN, make sure you remember that, write it down somewhere so you don't forget. It can be a little bit cumbersome to reset that. So I highly recommend that you freeze your credit. So why are we talking about credit? Why is it so important to manage good credit? Because number one, first and foremost, it protects you and it saves you money, and it gives you the ability to do the following things: buying a house, for example, getting really good interest rates on loans and credit cards. 25% interest rate on a credit card is not a good deal. We want, I know that interest rates are rising, but relatively speaking, 29% interest on a credit card is not great. A lot of times having good credit allows you to get a job and to keep a job. Some people have to deal with sensitive information, and having access, somebody that doesn't have good credit might be vulnerable to selling information or selling secrets, things like that. So oftentimes, depending on your job, they've equated, having somebody who's responsible with their money is probably going to be responsible in other ways. And so a lot of employers will use that as a factor. Not an only factor, but could be used as a factor to making you an offer of employment. Being able to rent a home in your name or get a loan in your name and not have to have a co-signer. Having good credit allows you to do that. When you purchase a phone or a phone plan, a lot of times if you have good credit, you're going to get a better deal. You're going to get lower monthly rates and you're going to get a better rate on your phone. If you have poor credit or no credit, sometimes utility companies want you to make a deposit for electricity or any other type of utility until you've had a good history of payments. But if you have good credit, they're not going to ask you for a deposit. Insurance, it can affect your car insurance rates, believe it or not. It's not the only thing that affects your car insurance rate, but it sure can make a difference in paying for insurance. And specifically in Utah, Insurance companies can use your credit information when they're initially underwriting the policy, but it can't be the only factor used in the decision and setting your rates. And auto insurance companies can only use credit information to offer you a discount on your premiums, not charge you more. So having good credit can help you qualify for some of those savings. And then bottom line, just we're all about saving money. So the less interest we have to pay, the lower rates we get. That's more money that we can spend or save or invest. So bottom line is, that's why it's really important that we manage good credit. We pay our bills on time. We check our credit reports. And also, I encourage you to set up alerts. If you have credit cards and bank accounts, set up an alert where you get an email or a text when there's a transaction that's posted. I do that for all of my accounts. I don't care if it's $1 or 1 penny. That way I know immediately, was this me? Did I actually make this charge? This has happened to me with Amazon, where it was an $8 charge and I didn't recognize it. And lo and behold, it was fraudulent. I had stored my debit card on Amazon, which I've since removed. But somebody, all these data breaches you hear about, you may not see that affect you immediately. It might be 2 or 3 years after our information gets sold on the dark web. And then all of a sudden you see something happening with your bank accounts or your credit cards. And so that's why it's important that we continue to check our credit. And if you ever get a letter from a company saying you may have been a victim of this data breach and they offer you free credit monitoring for a year or 2, take it. It's totally worth it. You just never know when your information may be compromised, because these thieves will sell information and they'll try and use it. And if they're not successful, they'll sell it to the next lowest bidder. And it's just, our information is just floating around out there waiting for somebody to just finally be successful with making a hit. So I can't stress enough how important it is to just keep an eye on our credit. So we talked about the 5 factors of your credit score. Paying on time and keeping our balances low, we're 65%. So those are some things that we can control. I've said it probably 5,000 times during our time today, but it's really important that you monitor your credit. And then just be proactive. It frees your credit if that's something that you're inclined to do. It's free. It's pretty hassle-free. And it just gives you that extra layer of protection. So I challenge you. We always like to leave folks with some action items before we conclude, and pull your credit reports. If it's been, like I said, a year or more, I highly encourage you to, after we finish today, to go on annualcreditreport.com and pull all 3 of your credit reports. If you answer a question incorrectly, the worst that happens is they're going to send you a form and have you fill it out manually. So it's not the end of the world. Sometimes the questions can be tricky. And then just make sure you review your credit reports for accuracy if there's any errors. And if you're curious about your credit score, check with your bank, your credit card, your credit union. You can go to any of those websites we talked about: Credit Karma, Credit Sesame, Capital One, CreditWise, and see if you can get your credit score to see where you stand. Especially, and if you're going to be applying for credit, I highly recommend you pull your credit report and your credit score before you apply for a loan or a credit card, just so there's no surprises. I remember when I bought my first home, I wasn't approved for the mortgage because I had something in collections from college on my credit report, because I never knew to check my credit report. I didn't know. And so I encourage you to do that before you ever apply for credit. Does anybody have any questions? I know we've covered a lot of information. Credit is a pretty big topic, but at least wanted to dispel some of those common myths out there. It's okay to check your credit report. It's not going to hurt your score. How to protect yourself. Anybody have any questions that maybe I didn't cover during our time today that you'd like to know about? I'm happy to answer any questions.
There are a couple in the chat here. Let's see if they've been covered. Christopher, did she answer your question about freezing credit?
For some reason, I'm not able to see the chat, Trenton. I'm sorry. I don't know why I'm not able to see that.
Are you done with the slides?
Yes.
Sometimes if you got the full screen on Zoom.
There you go. You were
Looks like-
right. That's exactly. Okay, so let's
Okay.
see.
Looks like Bill has his hand up too.
Different, I went to this website and I always get an error when trying to get my credit report. Make sure you have, meaning you're not able to get it, Christopher, or make sure you have the right website, annualcreditreport.com. A lot of people put in free credit report and it takes them to this other. So, the other thing too is if you are a victim of identity theft and there's information on your credit report it's actually fraud, you wouldn't be able to answer the questions correctly because you don't know. So that's kind of like I don't know what the word is, but it's like you're not answering the questions correctly because you don't realize that there's fraudulent activity going on your credit report. And so that's where you could always report fraud with the Federal Trade Commission. You could make a report to investigate. Like if you're having an issue accessing your credit reports, maybe we need to dig in a little deeper as to why. So if you see accurate information, you can dispute it. I think I talked about that directly on the website. You can call the business that's reporting the information. And if you're not able to resolve it that way, then we can elevate it to the CFPB, which is the Consumer Federal Protection Bureau. It's a consumer advocacy government group that helps people resolve issues with creditors and lenders. Opt-out pre-screen, yep, so freezing credit, I think I explained that. With an auto loan, is there a way to negotiate paying only towards the principal or to lower or have no interest rate? Okay, so what I would say about paying only towards the principal, you have to pay, your payment consists of principal and interest payments. But if you want to save money and you can pay a little bit extra on your car loan, make sure they apply the payment to the principal. Don't prepay interest. That doesn't save you money. A lot of people say, oh, I don't have a car payment for 3 months. When I would work as a financial counselor with clients, and I'm like, how is that? Oh, because I paid extra. But what they did is they put the extra towards the interest, not the principal. So just make sure any loan you make extra payments on, that you specify it goes towards the principal. That's how you save money. Because every time that interest is calculated, the next month, it's calculated on a lower balance. So with the alerts for your credit cards, go to your credit card company, either call them or go online. I have a couple of credit cards and I was able to set it up online. And if it's depending on who your creditor is, sometimes the websites are more confusing than others. But it's usually pretty easy and you can set it like to a penny if you want. Like any charge that comes through, I want to know about it. I get something on my cell phone and I can see this charge. You just used your card at a gas station. I'll be like, yep, that was me or that was my spouse. It's very, very helpful. And it's a way to kind of nip things in the bud. And then also the bank can do the same thing. Like if I get a deposit, if I have an automatic payment coming out of my bank account, I get notification. Because I've actually had my bank account hacked into. I was one of the victims of a data breach that affected service members because I'm a military spouse, and somebody was just paying bills, taking money out of my account, automatic clearinghouse, ACH. So I had to lock that down. And the only reason why I caught on to it is because I got an alert. It was a large payment and I didn't recognize it. And so I had to immediately contact the bank and start working on fixing that, which was a bit of a hassle, but eventually it was resolved. So just be diligent. And, I think the alerts just help us act quicker, to what's going on, because there's just so much going on with our credit and our finances. I hope I answered all the questions. Well, here's one. Many stores offer discount on the current purchase. Okay. Having too many credit cards, this is an interesting question because remember how I talked about credit utilization ratio? So if you have lots of accounts and you're not using it, actually can kind of help your score because it lowers your credit utilization ratio. You're using less of your available credit. The only thing with there isn't like a magic number of how many credit cards is too many. I would just encourage you to stay on top of those credit cards. Because if you're not using them and you forget you have them, you don't want them to get into the wrong hands, and make sure that you're monitoring it. So there's no magic number for how many you have. If you want to open more credit cards, one of the rules of thumb is to not have it from the same issuer. Like, don't get 2 from Chase. If you want to get a Visa from Chase, maybe get a Visa from another credit card issuer that's supposed to help your score a little bit by not having it from the same issuer. Checking your credit score for free. You can go start with your bank, your credit union. If you have a credit card currently, contact that credit card company and see if they will provide you with a credit score. Or you can go to let's see, Credit Karma, Credit Sesame, Capital One, Credit Wise. And there was one other one that is on there. Those are all ways to get Nerd Wallet. Those are the ones I just listed are to get your Vantage score. Pretty similar to your FICO score. If you're going to have a good FICO score, you're going to have a good Vantage score. So they're just a great way to see just kind of how you're gauging, and you can get them for free. You can always pay for a FICO score. You can go to myfico.com. But I'm all about, why do I have to pay for something if I can get it for free? But you always can pay for a FICO score. It's usually about 20 bucks. Any other questions? Okay, so just wanted to mention we have free, we're getting ready for our winter season. If any of you are interested in learning more about personal finances, we have free weekly webinars starting in January. Just going to show you real quick our where our website is. If you want to just learn more about, we talk about credit, we talk about debt. If you go to finance.usu.edu /EFW, which indicates empowering financial wellness, we have a lot of great free webinars. Even if you can't attend them live, they'll always be recorded, just like today's, and you can you'll get the email with a copy of the slides that were presented, as well as a recording of the webinar, and you can watch it when it's convenient for you. So we talk about credit, debt, being financially organized, and budgeting. And so we're always variations on the theme. So I encourage you to check those out. They're totally free if you'd like to learn more about personal finance. Good stuff. And I'm one of the instructors. Alicia and I are both instructors for those. And I want to thank you for joining us. We always love to hear feedback. We are grant funded, and they love for us to report what you're learning or what you plan to do as a result of what you're learning with us. And if you'd like to fill out the survey, we'll enter you for a drawing, and we're just giving away some fun swag as a thank you for taking the time. It's a pretty quick survey, 2 or 3 minutes. Won't take a ton of your time, but we would love to just get some feedback if you could do that. I'm just going to check in the chat. Okay. Are we good then? Trent, anything else that?
I think, unless we have any other questions that pop up quick, if you have a very last minute question, just unmute yourself. But yeah, we want to thank Vincenza, and Alicia had to drop off a little bit early. Appreciate the information and the opportunity. Our next in this series, I think, is February. Is that correct?
Yes, February 8th.
Okay. So we will have our normal monthly professional development, but for this series, February 8th will be our next one. So watch for that. If you missed the first one, which we did have a job fair, a virtual job fair going at the same time, you can check out our YouTube channel. And let's see. Mike, do you have that by handy real quick?
Say that again, what you're looking for?
Our YouTube channel.
Oh,
I can pull it up, but
Yeah, I don't
sometimes
have it handy. Sorry.
okay, that's okay. I'll find it real quick, and I'll share that in the link as well. So you can watch the first one that we did a couple months ago, and then we'll have this one. So all right. So thank you all. And I will put that in the chat. So if you're wanting to get that link, I'll hold on for a minute and we'll see you in a little bit.
Thanks, everybody.
Thank you.